What is up, boys? I am back. This is video number 6 of Jacyb's Bootcamp. Today I'm going to be teaching you inversion fair value gaps, also known as the short form IFVGs. This is a very simple concept to understand, like literally the easiest confirmation, like just confluence ever. These are used mainly as entry confirmations. You'd press buy or sell when this occurs, obviously with context, tapping out of a fair value gap or so on and so forth. I'll get into my strategy later down the track in different videos, but this is just teaching you what the actual inversion fair value gap is. And when you're using this as an entry confirmation, you want to be looking for it on the 1 minute time frame and the 5 minute time frame. And then also this confluence, inversion fair value gap, can be used to confirm the trend. So if we are in a bullish trend, it can confirm also that we want to be bullish, kind of thing. I'll go over all of that later. It will make a lot more sense when you actually know what the confluence is, but here we go. So this is a bullish fair value gap getting inverted to the downside. So I showed you guys in previous videos fair value gap. This is a fair value gap, very nice and simple. So an inversion fair value gap is as easy as the name is. This bullish fair value gap that gets created getting inversed. Very simple. And this would be a good entry to see price continue lower to the downside. So that's what an inversion fair value gap mainly does, is shows us that we want to continue going in the opposite direction kind of the trend. So very simple. We have a candle, a full candle closure below this fair value gap, inverting it. And then a bearish fair value gap getting inverted to the upside. Very simple to see as well. We have this fair value gap that we have created. We have this fair value gap we have created here. Very nice and easy. And then we get a full candle closure through this fair value gap, inverting it, showing us that we want to see price continue higher to some sort of drawn liquidity. Simple. Very simple. That's all an inversion fair value gap is. And now I'm going to show you what inversion fair value gaps aren't, and less probable inversion fair value gaps. These are still inversion fair value gaps, but just way less probable ones. So we'll move that out of the way. So here, we've got a bearish fair value gap here, and price doesn't invert this fair value gap. Why is this? Because this candlestick doesn't close above this fair value gap. So when we're looking for an inversion fair value gap, we want to see the candle fully close above the high, and we need to see this next candlestick, wherever it goes up or down, we want to see that get created before knowing it's an inversion fair value gap. So you may see in the chart sometimes, yes, the candlestick is up here, but it hasn't closed yet, and then we ended up wicking down here in my example and not inverting the fair value gap. So this fair value gap is still a valid fair value gap because we didn't close above it. If we see this next candlestick go up here, that counts as an inversion fair value gap technically. And we're going to show you the example just on the bullish end, the bullish fair value gap end as well, just so you guys can see it and imprint it in your brain. Make sure you're also journaling all of this as well. If we see over here, we have our bullish fair value gap. Simple. Bullish fair value gap. We see price is starting to trend down now, and we have a candlestick that wicks below this fair value gap, but it doesn't close below it. We can see it wicks back up right here, and it fully closes right here. Nice and easy. The next candle, like I said, could close below here, and that would make that an inversion fair value gap. But the next candle could also go up here, kind of thing. So that would not be a good entry confirmation. And now I'm going to show you less probable inversion fair value gaps. So if we have a look over here, we can see we have this bearish fair value gap, sorry. Let me just put a box around this, just so, no, it's all right. So we have this bearish fair value gap here. As we can see, price comes in, taps into the fair value gap, displaces from it a little bit, and then continues higher, closing above this. This is still a valid inversion fair value gap. It's still a decent entry confirmation. The only thing that I personally don't like about candles that chop through this is we can see, say this is on the 1 minute time frame, we have 1, 2, 3, 4, 5 minutes worth of price action before this fair value gap actually got closed above right here. So it makes it less probable because we didn't have an instant reaction. Like if we have a look over here, we have an instant reaction and close above this with good volume, good displacement, showing that this is probably going to continue higher very quickly and very aggressively. As we can see over here, price might go a little bit higher and it might could just chop around and do a bit of piss-all shit, low key. This just shows slower price action. Still completely a valid fair value gap because it did get inversion fair value gap because it did get closed through, just less probable. I'd just say be a bit more careful when you see inversion fair value gaps like that. And same scenario over here, we see a bullish fair value gap right here. This bullish fair value gap, bang, we can see price returns into this bullish fair value gap. We displace out of it a little bit and then we start trickling lower. We do get this closure below, making it an inversion fair value gap, of course, but we can see say this is 1 minute time frame again. We can see 1, 2, 3, 4, took 5 minutes to get through. So it's a lower probability inversion fair value gap. We like to see inversion fair value gaps that are super aggressive like this because that shows we want to continue in the way of the trend very quickly, which is what we want to see. Still a valid inversion fair value gap, like I said for the previous one, but just less probable. Let's hop over to the 15-minute time frame now, see if we can find some good inversion fair value gaps that worked well. Here we go. So as we can see over here, we have this fair value gap right here. Bang. We use inversion fair value gaps usually on the lower time frames for entry, but it's super easy to find inversion fair value gaps on the 15-minute. So that's why I'm just going to show you on here. So as we can see, we created this fair value gap here. We have the candlestick pattern 1, 2, 3, wick here and wick here. Bang, fair value gap. And we can see this aggressively gets inverted. So we see the inversion. We could have, like, obviously we would need context, would need us coming out of some high time frame PDRA, 4-hour fair value gap, 1-hour fair value gap, something with good context to show that we want to continue higher. But as we can see here, inversion fair value gaps do work. Bang, we could catch a trade similar to this, a very good target at this high, possibly a good draw on liquidity. I have no idea. I'm just showing you this for the example, but it shows inversion fair value gaps work. They happen in real markets, so on, so forth kind of thing. I'm not sure if there's any other quick examples I could show you. Just scouring through that. I mean, I guess here as well, I'm showing you really only bearish fair value gaps getting inverted to the upside. But as we can see over here, like say this fair value gap got inverted and we take another long position of this here, targeting this high up here. We see we get edged on the high, but you can understand what an inversion fair value gap is very simply off that. Very, very simple to understand. And then what I mean by showing confirmation in trend, used as a good confluence showing confirmation in trend. So usually on the 4-hour and 1-hour time frame, I can use this, we'll go on the hourly, as say we're bullish for the day. So say we have some price action over here. Let me go to the drawing tool. We have price action over here and we're chopping down and we have a fair value gap right here. Bang, we have a fair value gap. And I see price, this is on the hourly time frame, invert this fair value gap. So this fair value gap is no longer a fair value gap or anything. It's an inverted fair value gap. I can safely say that this draw on liquidity to the upside here could be very good draws on liquidity because we don't have a 1-hour fair value gap we could have been tapping off of to go down. We have it closed above. The 1-hour candle is closed. So it's safe to say that we could more than likely go to those draws on liquidity to the upside there. That sort of covers everything with inversion fair value gaps. I'll see if I can find something on the higher time frame right now to show this inversion fair value. I'll be able to find one over here, I think. Have we got any fair value gaps? Bang, here. So we have this bullish fair value gap right here. Make it green for bullish. Turn my fair value gap indicator actually off, so this will be easier. So bang, we have this fair value gap. We can see right here, this fair value gap came up. We tapped into it and continued displacing higher. All well and good. But if we have a look over here, this candle right here, this small little candle, inverted the fair value gap. So now this fair value gap isn't an actual fair value gap anymore. So we have nothing really pushing price wanting to continue higher like we have here. This pushed price higher because we tapped into it, and moved higher. But if we see here, it inverted it, showing us wanting to now continue in a downtrend. And what do? Obviously, you wouldn't take a trade off of a higher time frame inversion fair value gap like this, but say you do take it, price drops a lot. So on and so forth. Very, very sort of simple understanding kind of thing. It's just a normal fair value gap with a candle closure through it, inverting the fair value gap. I hope that makes sense to everyone. If it doesn't, I did drop my free Discord. Let's see if we got it over here. I've got my free Discord, guys. So if you don't understand, just send me a message in the free Discord, tag me, send me a message on Instagram, whatever you need, and I'll help you guys out. I'll catch you guys in the next video for, what is it? Probably CISDs, which is another entry confirmation, along with inversion fair value gaps. They're sort of the same. I rank them both very highly. You guys will understand that. It's a harder, more difficult confluence to understand, but you guys will get the hang of it simply. I'll catch you boys later. Peace.